Hey everybody, today we are doing Autodesk. So Autodesk, I genuinely have no idea what the company is about. We will get into it. I believe they are business software, but I don't remember. Just released their earnings yesterday. They are down, I believe, a little over 5% today. So we are going to get into it, see what happens, see what's going on with the company, go over their financials, recent earnings report, and then go over their chart. So make sure to subscribe and let's get into it. All right, so starting off with Autodesk, you'd see software and services, AutoCAD Pro, Revit, Civil. So it's essentially design software for building design, engineering, digital production services. Um, so let's just get right into it. Cost of capital looks solid at just below 11%. Target price is at 322, which is a little bit higher. Long-term growth rate looks strong at 22%. Everything looks good there. Hopefully we see some consistent sales growth, which it looks like we will. I believe most of their income is from subscription-based things or recurring income. So that is definitely a huge thing in business nowadays. So it's definitely very, very positive for this specific business. Operating income looks solid, a lot of growth. Net income looks about the same. Everything looks good here. EPS, solid growth, and their total shares hoping to see some reduction, which is always nice to see. So overall, basically a perfect income statement there. Let's check out the balance sheet. So we should see a decent amount of cash, and it looks like we will. Fairly steadily growing too. Over 2.2 billion now, which is pretty solid. Assets are looking like they are consistently growing, which is good. Short-term debt is nothing. Long-term debt is almost completely coverable by cash, and they also reduced it over the past 2 years, which is really, really good. Especially for a company that's growing this strongly. That is fantastic. So overall, really, really good for the balance sheet. For retained earnings, they are negative, but again, we saw that net income going up. I'm sure it'll probably be positive in a year or two. Can't imagine it wouldn't be. Let's go into the cash flow, check out everything here. I'm actually going to do the 0.5 for retained earnings there because they were still negative. Operating cash flow looks good. Almost all of it is from operating funds. Always enjoy seeing that. CapEx is super low for them, which is good. Most of their negative investing cash flow comes from buying acquisitions and looks like either purchasing or selling investments, which is really, really good. That is the more positive version of investing cash flow that we want to see. Financing activities, changing capital stock. Again, we saw their total shares reducing over the past few years. Looks really good there. And then free cash flow looks fairly consistent. Hasn't seen a high in a few years, which is a little concerning, but at the same time, with their net income growing and their sales growing, positive free cash flow is all we are looking for here. Let's check out their use of cash. Again, you can see these share repurchases up here, debt servicing. We'll see not a lot of debt issuance recently, at least compared to how much they paid off. However, they really are a little mixed with it, with their long-term debt at least. So I'm going to do the 0.5 there until we can see some more consistent debt repayment. And then for stock purchases, it looks really, really good. Very good across the board for that. Let's go into the ratios. I'm hoping to see some reducing SG&A, and it looks like we will see that. So 72 average over the past 5 years. They're at 69 now. You could see it used to be much, much higher, even over 100% at one point. So overall, fairly solid SG&A to sales. 69% is still fairly high. That probably contributes to their lower operating margin, but overall, that's pretty decent. And Looks like operating margin is also above the 5-year average of 16. It's at 20 now, which again is very good. ROA, ROE are both just about in line, coming in slightly above the ROA, and the ROE is at 60, which overall is pretty solid. One thing to note with that, though, is they do have negative retained earnings. So once the retained earnings go positive, I'm sure this will be a very, very different number, but overall looks decent. And then long-term debt to total equity is at 137. Now, again, with those negative retained earnings, you will see a very high debt to equity. So I'm going to do the 0.5 here only because it's well above 100%, which isn't the greatest thing. It is coming down consistently, which is why I'm doing the 0.5, but hopefully within the next year or so, we'll see that go below 100 and continue dropping. So overall for Autodesk Inc., we have a 21.5 out of 23 and 96%. That is really, really good. For the companies that I've personally reviewed, that is fantastic. So overall 96, we will put that in the scale here and see it is the second highest that I have reviewed, which is very solid. So now let's go over their earnings report, which came out yesterday. There should be a report here for it, and we'll see the metrics recap right here. So few things to look into. Sorry about that. Subscriptions looks like they beat slightly. Maintenance was down about 2 million. Other was beating. Operating margin came in a little bit above. Operating cash was below. Free cash flow was above. Deferred revenue was just about in line. And it looks like 369 Q2. Short-term, long-term looks all right. Billings was just about in line. Recurring revenue as a percentage of net revenue. So 97% of their revenue is recurring, which is phenomenal. That is very, very good. And then RPO, 14% year over year. So overall, this looks like it's a relatively decent report, at least in my opinion. We'll have to see what happened with the guidance, if they want to show some guidance. So I'm assuming that's what it was. And if I go here, you can see business outlook, guidance metrics. So overall revenue up 11%, operating margin 21 to 22%, which I believe is above where we saw earlier, or at least close to being in line with it. Non-GAAP operating looks good. So overall, their guidance looks like solid growth over the next year. I'm assuming what happened was people were expecting higher, and that is why we will move here and look at their stock chart. So you can see earnings came out and they dropped fairly significantly, over 6% now. Has recovered from what looks like a low of around 292. They're at 296 at the moment. So we'll just have to see if in the future they recover from this. I'd imagine with the price honestly looking fairly decent, they will recover within maybe a couple days, and then continue going up. Or if people really didn't like the earnings report, they will keep dropping. So overall, down 6%, sort of in line with the support trend here that you can see. Would have liked it if it was a little bit higher to stay in line here with everything else, but overall it's a little bit in there. I wouldn't bet the house that it's going to continue up, because no matter where you put it, this support line is not exactly the most reliable. But overall, that is it for Autodesk. Hope you enjoyed, hope you learned something. Make sure to subscribe, and I will see you next time.